So welcome. Thank you so much for taking some time out of your day to join the Stevens Initiative's 2022 Virtual Exchange Grant Competition webinar, which will be focusing specifically on budget and compliance and the federal subaward. If you have any questions during this presentation, please do submit them in the Q&A box in Zoom, and we will be addressing them during the second half of the presentation. If it is of interest, and if you have not seen it before, the Stevens Initiative also has a pretty robust frequently asked questions document on our website, which is stevensinitiative.org. So if you have any questions, you may want to consult that very robust document. And if all else fails, please do plan to ask some questions during our webinar today. We'll have plenty of time to go through some questions. Before we start our presentation today, first of all, I'll just briefly introduce myself as well as my co-presenter. I'm Andy Schaefer with the Stevens Initiative. I'm going to just be talking for just a brief moment, and then I'm going to turn it over to my colleague, Omar Al-Sawalha, who will be giving a presentation on the budgeting and compliance piece of this competition. We are going to record this webinar. We won't be able to share slides, but the webinar will be recorded. It will be posted to the Stevens Initiative's YouTube page. Also, if you missed the kind of competition overview webinar that we hosted the other week, that has been recorded and posted to the Stevens Initiative's YouTube page as well. So you can feel free to check that out. What we are going to plan to do during our hour together today is talk very briefly about the Stevens Initiative for those of you who may be new to the Stevens Initiative or are just learning about it now. That's going to be brief because we're going to spend the majority of our time talking about the funding source for the federal awards that we give out. We're going to talk a little bit about the federal uniform guidance, cost principles, and procurement methods for writing into your budget for your grant proposal. We will then talk about the budget itself and our budget template and go through some of the budget categories. And then we'll kind of close out our presentation section talking about monitoring and oversight requirements. So again, if you have any questions during the presentation, feel free to add it into the Q&A box in Zoom. Just to talk very briefly about the Stevens Initiative, again, for those of you who might be new, the initiative is a lasting tribute to the late Ambassador J. Christopher Stevens, who dedicated his career to building bridges between people in the United States and in the Middle East and North Africa. The ambassador was fortunate enough to have study abroad and Peace Corps experiences when he was young, and these helped to shape his view of the world. And so in the ambassador's honor, the Stevens Initiative is attempting to make these kinds of international experiences and international learning experiences available and accessible to as many young people as possible. And the way that we do that is through supporting virtual exchanges that are connecting young people in the United States with young people in the Middle East and North Africa. Our 2022 virtual exchange competition is sponsored by the United States Department of State's Bureau of Educational and Cultural Affairs, with additional funding provided by the Bezos Family Foundation. Just to talk very briefly for level setting purposes, what are we talking about when we're talking about the virtual exchange that we are looking to fund through this competition. We like to keep a broad view of virtual exchange. We think that it can be integrated into, just about every subject there is: science, social sciences, business, STEM, STEAM, the arts, you name it. Just a few kind of brief notes when the Stevens Initiative is considering virtual exchange. We think it's important that virtual exchange involves sustained and technology-enabled communication and collaboration that can happen synchronously or in real time, or asynchronously over a period of time, or both. And just one other note on virtual exchange. Many practitioners believe that facilitation by prepared and responsible adults who are often, but not always, educators is a very important component of successful virtual exchange. And just to kind of close out kind of the Stevens Initiative's overview, we aim to build the field of virtual exchange holistically by working across 3 different areas. The first of which is what we're talking about today. We give grants out. We run competitions for educational institutions and nonprofit organizations to administer virtual exchange programs that connect young people in the United States with young people in the Middle East and North Africa. Through the programs that we fund, we're able to collect data, we're able to learn, we're able to share best practices and develop resources so that we can serve as a knowledge hub for the virtual exchange field. And then having these resources available helps to support our work when it comes to raising the profile of virtual exchange globally. So onto the meaty stuff. I'm gonna pass it over to my colleague Omar for the remainder of the presentation.
Thank you, Andy, and thank you everyone for joining us today. I'm gonna be talking now about funding and regulations. The Aspen Institute, which is where the Stevens Initiative is housed, has a cooperative agreement with the U.S. Department of State. The Aspen Institute Stevens Initiative passes the government funding into subrecipients, which are those of you who apply for the funding from us. And for the sake of this webinar, we use the term of grantees interchangeably with subrecipient. Those of you who will receive a grant from the Stevens Initiative would be subrecipient of the U.S. government funds. Therefore, the federal government and regulation that govern the Stevens Initiative relationship with the State Department flows down to our grantees. The federal regulation that governs our grants with the U.S. government, in the U.S. government Uniform Guidance 2 CFR 200 and 2 CFR 600. You might want to check on them and read them online to be familiar with these regulations. The Stevens Initiative at the Aspen Institute is responsible for distributing these funds as grants, conducting oversight and monitoring of its grants, providing technical assistance for grantees, and building strong partnership with grantees in the field. All of this for an effort to grow the virtual exchange field. Should your proposal be selected for funding, you are a subrecipient and grantee. You as a subrecipient or grantee is responsible for implementing the proposed work. We look closely at your internal control, which include monitoring and oversight, accounting and finance system, including general ledger and HR setup. You are responsible to have strong physical and program management system to properly steward federal funds and to follow the funding requirements per those federal guidelines I mentioned in the previous slide, and ensuring appropriate progress towards performance. Now we will discuss some key points of the uniform guidance for you to keep in mind as you develop your budgets. Please note that this overview is not substitute for reading the regulations yourself. The uniform guidance provide a government-wide framework for grants management, which helps strengthen program outcome through effective use of grant-making models, performance metric, and evaluations. The guidance applies to nonprofit, institute of higher education, states, and local governments receiving federal funding. The Uniform Guidance Cost Principle establishes principles for determining the allowable costs and how funds can be spent. These principles are designed to provide the federal These principles are designed to provide that federal awards be their appropriate share of costs recognized under these principles, except where restricted or prohibited by statute. And finally, the guidance outlines audit requirements of grant recipients and how taxpayer money is assessed. There are some concepts that govern cost principles of federal awards. All costs put on your budget must be allowable, necessary, allocable, and reasonable. It's important to ensure all costs are reasonable and that would pass the prudent person test. The idea of determining what is reasonable can be a very subjective process. You should ask yourself if the costs reflect the same action of a rational, sensible, prudent person. You need to establish if the costs necessary for the performance of the project and are consistent with established institution practices. Costs should be allowable under the regulation or award provisions. So in addition of being necessary and reasonable, they are allowed within the terms and conditions of the award and within your own organization. Finally, costs should be allocable and verifiable, which means they should benefit the project and be easily identified and assigned. Disallowed costs include alcohol, entertainment costs, lobbying costs, cash prices to ensure participant, and tuition to pay for youth participants in the virtual exchange program, advertisement that promotes the organization. Allowed costs include salaries, fringe, stipends, developing educational material, software, or supplies to support the project work, monitoring and evaluation costs, communication costs, etc. If you have any other question about allowable or unallowable costs, please do read through the regulation, and you are welcome to reach out to us if you have any questions about allowability. Here are some key takeaways about cost principles. Ensure that the cost principle applies to any cost in the project's budget. Costs must be treated consistently according to the established institutional policies and practices. Very generally speaking, direct costs can be charged to a specific award, and indirect costs can be charged to multiple awards. Here are some practical questions to ask yourself as you're building your budget. Is this an essential cost? Is the expense related to valid programmatic administrative need? Is this the minimum amount that I need to spend to meet my need? Do I have the capacity to use what I'm purchasing? Do I pay a fair rate? If I were asked to defend this purchase, would I be able to? As you're building your budget and thinking about the steps that you need to take, should the project be funded, you may need to account for the proper procurement methods for any contracts. A micro purchase is between $1 and $10,000, and no competitive quotes are required if management determines the price is reasonable. Small purchases, any contract between $10,000 and $250,000, and formal quotes or solicitations must be received from an adequate number of sources. Competitive methods. it is highly unlikely that you would have any contract over $250,000. However, any contract over that limit must be posted publicly and receive formal solicitation that are reviewed and scored against identifiable evaluation factors. A sole source procurement is any contract entered into without a competitive process. Some circumstances that may allow a sole source include an item or service only available by one source, or a competition is determined inadequate after a competitive process is administered. Every sole source requires documentation and market research and cost analysis effort, to name a few. Any sole source requires Aspen Institute prior approval. And now we will be briefly talking about building your budget as a part of your proposal. I will develop budget, reinforce your credibility as an applicant, make sure that you keep formulas intact, provide all the detail within the budget that we're asking for. Use historical estimates about how much that you can estimate a cost for a certain function. And most importantly, supplement your budget with a well-written budget narrative to support the rationale, purpose, and calculation of the costs that you put in your budget. The budget narrative should be able to stand alone and understandable, and to provide enough information for the reader to help them understand the program. So it should be in depth and describe the necessity and reasonableness of cost for conducting work in the proposal. Include, and please remember that, include contingency plan in your budget narrative and in your proposal design for any travel or event that might change to an ongoing, the coronavirus or any other reason. Through these next few slides, we will detail some of the budget categories, including typical costs that we see in the budget that are submitted to us. First is personnel. Personnel is the staff that work in the proposed budget. We expect to see each staff member listed by title and name. In the budget template, you should utilize the annual salary rate and percentage of time that will be dedicated to the project. We generally do not consider CEO or president costs to be allowable per Aspen Institute policy, if applicable. These costs should be through indirect costs and should not be listed anywhere in the budget, including cost share. The budget template also leaves room for fringe benefits calculation. What you insert here should be backed up by documented costs or established formulas. We will ask you for fringe benefit backup documentation if you do not include it in your application submission. Costs that fall under participant support costs or participant support may include data plans, travel allowances, training, and resources material. Most participant support costs should be for youth participants. However, depending on the organization financial policies, educators or other facilitators may qualify as participants in your budget. For an example, if your budget includes stipends for educators, this could fall under this participant support category. Travel, there's a separate travel tab in our budget templates for you to itemize any expense related to the project, personnel travel, or participant travel. Please be sure to include a contingency plan for any travel plans within your budget narrative. Supplies. Under supplies, you should list supply items by type. No item should be greater than $5,000. Any item listed is typically material that is consumed during the during the time of the project. Please be detailed as possible, rather than writing out technology supplies or classroom supplies. List out each item required for the project and its costs. It's likely that the organization submitting a proposal would work with partners in the United States and or in the Middle East and North Africa. But partners can encompass anyone being contracted to develop a curriculum to an institution co-designing and co-implementing a program with you. You may include payments to these partners in your budget, whether they are contractors or sub-awardees. For contractors, describe the product or service to be procured by contract and provide an estimate of this cost. Rationalize the rate for the cost in your budget narrative. Keep in mind the federal procurement policies I mentioned earlier. For sub-awardees, list your implementing partner or partners that will help you carry out part of your federal award and rationalize the rate for this cost in your budget narrative. You may wonder whether a partner in your project would be considered a contractor or a sub-recipient. Please look at our frequently asked questions on our website for a full checklist to determine whether a partner would be considered a contractor or a sub-recipient. Generally, contractors provide you with a good or service, serving as a recruiting arm for your program, designing a curriculum, evaluating your program. These partners normally operate in a competitive environment and are not subject to the same federal compliance requirement as the grantee organization. Subrecipients, however, have much larger role in the program beyond a simple good or a service. These partners typically provide input into your program design or implementation. Subrecipients are subject to signing an agreement similar to the agreement that you, the main grantee, would sign with the Stevens Initiative and are subject to follow the same federal regulation. Other direct costs include any items that do not fall neatly under other budget categories, for example, recruiting materials. The budget templates includes an indirect cost calculation. Please use your negotiated indirect cost rate, known as NICRA, if you have one. Or you may use the automatic 10% de minimis rate. If you do not have the NICRA, you may use charge up to the de minimis rate. There is also a section for cost share. This is voluntarily. The cost included under cost share must be verifiable from your records and cannot be included as a contribution for any other federal award. So to recap some important items to keep in mind as you propose to submit your budget. Please be sure to use the provided templates available for download and SurveyMonkey apply. Do not use your own budget templates. If there are not enough rows under a certain budget category, please add rows. Leave the formulas intact and follow the instruction listed on tab 1 carefully. Adjust the indirect cost calculation depending if you have a NICRA or not. And be sure to match all dates listed in the budget with the budget narrative project plan application timeline. All application documents must match the same period of performance. Now we will discuss some items related to monitoring, oversight, and compliance with these awards. I'm going to briefly mention some reporting requirements. Grantees are required to submit progress, financial, and evaluation reports. Generally, this happens quarterly. Stevens Initiative grants are cost reimbursable, and payment is contingent upon receiving and reviewing all reports. Grants will be expected to conduct work in accordance to the scope of work, which is essentially all of the work that is outlined in your proposal. And a few ways to monitor this include site visit, disc reviews, sampling, either of invoices or a partner of your partners to check up on how the work is being conducted, and reviewing the reports we mentioned. In the event of non-compliance, the Stevens Initiative will take the appropriate measure with the grantee. Failure to meet program objective will result in us working on a corrective action plan, which could include a no-cost extension, suspension, or termination of the sub-award, or the grantee paying funds back to the Stevens Initiative. These are extreme measures, and we hope that this presentation will help you build a good foundation to be compliant if your organization would receive a grant. You will see a list on the screen of different methods of support we are offering to our applicants. We update the frequently asked questions section of the Stevens Initiative website regularly, so check back over the summer for more answers on your question. We are hosting a third and final webinar in August 10 to go over any additional consideration when submitting your application and to answer any additional question live. Lastly, a reminder that applications are due on September 29, 2022. And now we're going to go to the Q&A part of this webinar.
Hi there, can you all hear me okay? Great. Andy, is now a good time for me to just say a word about myself and start with some questions?
Please.
I'm Henry Shepard. I work on the Stevens Initiative. I want to congratulate my colleagues Omar and Andy for beginning a wonderful presentation today. Thank you so much. Why don't we dive into some of the questions that have come into the chat over the first phase of this presentation. And for all of you on the line, you can continue to type in the Q&A box any additional questions you might have. Sometimes we're able to write written answers in response. And so you might be able to see there some written answers to questions that others have already posed. And then you can ask any additional questions. And I see the number of new open questions is going up, which is wonderful. So I'll begin with some that have already come in and we'll take it from there. Okay, the first question is, can an international partner subcontract to an institution outside the Middle East and North Africa or MENA region to support the administration of one of these grantee projects?
The Department of State cooperative agreements is basically it's only interesting in partnership for now between the US and MENA. If it's a contractor who's international would help with some of the work of the sub-grantee, I don't think there's a problem there, but not as a partner in the work of the program itself. Maybe
I can just say one additional thing on that. It wouldn't be expressly ineligible. I would imagine that a situation like that would be rare because, as Omar mentioned, the work is intended to fund young people connecting from the United States and the Middle East and North Africa only. I could imagine that there may be a situation in which there would be a partner, who is located in a different country. So it wouldn't be ineligible, but you would want to make sure that the work and the program that you are proposing is connecting young people only in the United States and in the Middle East and North Africa.
Thank you both. Someone asks, can the US and non-US partners be co-awardees, or must one institution be the lead and the other a subrecipient?
we have one have to be the main sub-awardee, and they can give sub-awards. Of course, they have to mention that in their proposal about their partners, but we usually deal with one main sub-awardee.
Andy, would you maybe say one more word in the past about what we've seen or advised regarding the determination about which entity should be the prime recipient and which should be a subrecipient of the prime recipient? This question of, since there can't be co-awardees, how have you seen folks grapple with that question of who should be the prime recipient?
Yeah, that's a great question. One very obvious way to think through it is around questions of eligibility. So if one of the partnering organizations is just not eligible to receive an award for some reason, we outline eligibility rules in the call for proposals. So please do take a look at that if you have questions about eligibility. But if, for example, your organization is not a, tax, what do I want to say, like a non-profit organization, then, you would not be eligible to receive funding, but you could be, written into the proposal as a partner in some way. Or if your organization is, maybe brand new and you don't have a budget to accommodate a Stevens Initiative Award, maybe you're involved as a partner, and maybe you are not the prime recipient. So eligibility is certainly one consideration. Other considerations may include, which partner may be best equipped to manage a federal award. As Omar talked about during the presentation today, there's a lot that's involved in managing a federal award of this size. So you may want to discuss amongst yourselves and amongst your partners, who may be best positioned to take on not only, kind of in name, leading on the grant, but all of the management and administration and, reporting that's required of receiving this federal award. Those are a couple thoughts that come to mind. I don't know if Omar or Henry, you have other things to add to that.
Yeah, I mean, if there's two partners and you both are developing the program together, and then you're deciding which one should be the main one, I think, looking at your internal control, looking at the capacity that you have, and see which side or which partner can be or have the capacity to be the main subrecipient.
Thank you both. I appreciate your delving into that. It's a question that some applicants face, and I know it can be challenging and it's a bit subjective, but I think you've given some really good guidance. A very different kind of question. Are travel and accommodation costs for instructors or for instructor training, is that allowable, and can that be covered by a Stevens Initiative grant? Or maybe beyond whether it can be covered, in what way or under what conditions would that be an appropriate cost?
As I mentioned in the webinar, sometimes you can include these, for example, if it's like a travel for educators or stipend can be detailed or allowed in your budget, but you have to basically in your proposal outline exactly what the parts of these people would be benefiting your program, and if they are crucial to conduct the program, then their travel and their expenses would be allowable.
The way that I interpret this question, and whomever asked it, please do feel free to expand if this isn't addressing it. But if we're talking about training or preparation for virtual exchange implementation, for example, say you have educators in the United States and you have educators in Jordan, and you're bringing everyone in the United States together, and we're going to do a training, and we're bringing everyone in Jordan together in person, and we're going to do a training that is absolutely just an example, but that is something that we have seen in programs that we have funded before, and that kind of travel, as Omar mentioned, if it is well justified and necessary for the program, is allowable.
To expand on that just a little bit, there was another question that came in a bit earlier that wondered whether having faculty attend conferences, IT support, training for faculty on virtual exchange, whether those are allowable costs, and relatedly wanting to know more from us about what do we mean when we say participants. We use that word a lot when we're talking programmatically about who are the participants in a program. As it relates to these questions of budget and what the program is intended to do, when are costs like this, faculty travel, faculty training, IT, when are those appropriate and allowable costs for a Stevens Initiative grant?
Generally speaking, your organization have to have the capacity to run the program. So capacity, basically giving your employees, not the participant, that they are going to benefit from the program. If your employees themselves, you're going to send them to conferences or trainings, I don't imagine that will be allowable, because their capacity should be already built for you to be able to run the program. But however, if they are participating in panels or as educators, that can be allowable, again, if it's justifiable in the proposal.
I think we generally, and Omar, please correct me if I'm wrong, we generally don't support costs on the budget for someone simply to attend a conference. But if there is modest, spending on a budget to go to a conference, present on learnings from implementing the funded virtual exchange program as an example, or to present on a white paper that you wrote that was an outcome of the virtual exchange program, we have supported those costs in the past. We have also supported, training costs for like faculty or for facilitators who are going to be kind of implementing the virtual exchange itself. Those kinds of costs we have also supported. So again, if that's travel or if that's something else that's centered around the folks who are preparing to and are going to be implementing or facilitating the virtual exchange activities, just very broadly, those are costs that we generally support. I also saw this question asked about IT support staff, which generally is something that is an allowable cost. Again, Omar, correct me if I'm wrong, or different organizations and institutions have different policies about how these things are put onto a budget. Sometimes an organization will consider an IT support staff, just as an example, as a direct cost. And some organizations have policies where that's more of an indirect cost, and that's recouped through your indirect cost. So you may want to consult with your organization or your institution about how you account for that in your budget. And then there was also the question about participants, right, Henry? Like what we consider participants. For the sake of the proposal, we are talking about youth participants. For the sake of the budget, it can be a little bit murky. We are generally talking about the youth participants. Youth participants do not need to be students because these programs do not necessarily need to take place inside an educational institution context, but it certainly can, but they are the young people. But also, depending on your organization's policies around budgeting, participant support costs in the budget may also include adults. It may also include faculty members or facilitators, depending on how your organization wants to structure its budget.
Thank you very much. There's a question about whether folks can get feedback or what kind of feedback they can get during the period of the application being open. Can they submit a draft? What can they get from us? Maybe I'll just really briefly try to answer myself by saying that we are not able to give substantive feedback or advice about organizations' proposals. We are able to answer technical questions about eligibility or about how to interpret what we've written, or to help puzzle through, complicated instances of, whatever circumstances an applicant's facing. So with questions, please don't hesitate to get in touch with us. And we will definitely make sure we continue to reiterate the website link to submit your application, the email address to submit your questions, in all of our follow-up after this webinar. But questions are very welcome, but we're not really able to give opinions or advice about how to apply. There's a question here about whether in-person events or activities can be part of the proposal. Can you remind us, Andy, maybe briefly, whether and if so, in what way in-person activities are allowed?
Certainly. In-person activities are eligible. I know there's several different layers to this, so I'll try to just speak very briefly to it. In-person activities can occur locally. So you may have a classroom that is gathering for the purpose of, this is my social studies class, and we are also doing this virtual exchange program, and we're going to be teleconferencing with a classroom in Egypt. So that's one way in-person gatherings can occur. The next kind of level is there may be like domestic in-person gatherings. So like I mentioned, either for adults or for students, you may have in your program, everyone in the state of Louisiana is going to get together for this culminating event, who participated in the program. Or all of our educators based in the United States are going to travel to Washington, D.C. for a training as part of the program. So something like that, also eligible. Then the last stage would be in-person international travel and exchange, which is also eligible. Something like that, we generally would want to serve as supplemental to the virtual exchange itself. So just as an example, we have funded programs in the past that ran a virtual exchange over the course of an academic semester. At the end of the semester, they held a culminating pitch competition and showcase for some of the winning groups and projects, and everyone traveled to somewhere in the United States or somewhere in the Middle East and North Africa for that in-person kind of culminating event. That's just one example, but that kind of in-person international travel is also eligible, just as kind of supplemental to the virtual exchange itself.
How many institutions can a prime recipient partner with? And is there a specific number that we're expecting to see? For example, if the applicant is based in the MENA region, is there a certain number of US partners, or vice versa? If the applicant is in the United States, do they have to have a partner in the MENA region? Is there a limit on the number of partners? What formal guidance or observations would we make about that?
Do you want me to address that? Sure. There is no formal guidance on the number of partners. What I would recommend is a couple of things. One, overall, the program is up to you how you want to structure it. It can be kind of a bilateral program. So it can be, say, one institution in the United States partnering with one institution in the Middle East and North Africa and bringing, their students together. It can be multilateral. So you may be partnering with several institutions, organizations, individuals across different countries. Either of those are fine. That is at your discretion to choose. It is very likely that you will want to come into the competition and submit a proposal with partners involved, because you will most likely need folks from different communities that you're intending to serve to weigh in on the proposal, to be involved in the proposal, to be involved in the design of your intended program, to help bring in participants to the program. So that is something that you will want to consider. And then more just kind of on the logistical side of things, like we were talking about earlier, you will want to ensure that, you as the prime applicant and, therefore the prime recipient of funding are able to manage and administer the federal award. You may also want to work with your partners, whether they are considered contractors or subcontractors, on some of the other kind of like management pieces of the program. Maybe not necessarily the award itself, but someone may be responsible for, just as an example, like facilitator training, and you may want to establish that role with them as a partner. So just kind of in summary, no formal requirements for numbers of partners, but hopefully those are a few helpful considerations as you're building out your proposal.
Omar, we had a question related to procurement. The question was, for those processes that will involve a contract or an agreement for up to $250,000, what constitutes an adequate number of bids or solicitations? How do you know? Is there a specific number typically for something in that range, or how do you make a determination about what's an adequate number?
Usually inadequate, you can, based on what the service that you want and how many providers that can provide that service, you can really figure out what an adequate number is. But generally speaking, not less than 3 proposals. So 3 proposals, generally speaking, is minimum. That's in general, but sometimes it can differentiate basically from 1 to 1. For an example, you want someone to help you, like a communication or telecommunication company, and you have, I don't know, 12, but you just chose to contact 3. And so that in this time is like kind of, why only contact these 3, and et cetera, et cetera. Also, sometimes, even if you, for an example, you only have 3 people that can do this service, and you requested for them, the 3 of them, to send you proposals, but you only got 2. At that time, it's still adequate, because you reach for 3 people that can do that service, and you got 2 proposals. Is still considered adequate in this case.
Andy, one of the questions we have is it acceptable if my program has partners worldwide, but I limit the impact of this funding request only to the US and Middle East? And I think what might be helpful to lay out here is how we expect organizations that work in multiple places characterize and seek support for Stevens Initiative funding for specifically US Middle East focused programming.
Sure. This may not be a desirable answer, but I think the easiest way to do that is to separate out a portion of your program, so that there is a portion of your program that is just US and Middle East and North Africa. I say that somewhat cautiously because we're not intending to break any long-standing pre-existing programs. So I do want to emphasize that, but we have run into challenges in the past where we have funded, say a big global program, and participants, just as an example, are going into different groups, and you have a group where there's no one from the Middle East and North Africa in that group, or you go into a group and there was one person from the United States in that group, but then for whatever reason they had to drop out, and so those different groups are not getting the US, Middle East, North Africa exchange that we are intending to fund. And then we can't count that as work that we have funded, because we have very explicit guidance that it has to just be United States and Middle East and North Africa. So that is not necessarily the only way that we, can go about this, but I will say that that is probably going to be the easiest way to go about it. Maybe you just have one specific track of your program, for example, that's broken out, or one specific section of your program that's broken out. It can be challenging, and it can also be challenging when programs like this propose to kind of scale within the US, Middle East, North Africa world, because they are generally used to allocating their resources to a lot of different places and a lot of different people. So I would also maybe keep that in mind if you're considering kind of scaling within the MENA region for a global program. I don't know, Henry, if you had any other thoughts about that.
No, I think we should move on and try to cover as much as we can. Omar, can you say a little bit more about about how we want applicants to understand and calculate the 80% rule that we have? The question we received was, if they understand right, the grant funding cannot be more than 80% of the organization's budget. So what is that? What part of the organization's budget is that looking at? Is it the whole budget? Is it some specific unit of the budget, whatever? And also, is it calculated over a 1-year period, or is it supposed to be over like the 27 months that we're talking about in our period of performance? How are organizations supposed to think about the 80% rule?
It's usually based on your operational, 80% of your operational budget, mostly based on the previous year that it was audited and closed. But usually we could request up to 3 years just to look into things and how your budget was, like the numbers of your budget, and see how the 80% would work. But usually it's the operational budget, like the size of your operation, 80% of that in your budget. And usually it's on a previous year that it's closed and audited.
Thank you. So it's on a 12-month basis. It should be looking at a 12-month period for the most recently closed or audited calendar year.
Exactly.
Year. And there are, if it's fiscal year, sorry, I apologize. And there are instances where this, so just to say, this is something that we have in place to make sure we're working with organizations that are of a large enough size to be able to appropriately run a virtual exchange program and receive federal funds. So what part of the question was, how are universities supposed to deal with this, for example? Universities should be talking about the overall university budget, which I assume would be substantially higher than any of the numbers that we would be concerned about here. So this is really something, everybody needs to be addressing this question, but it's really something that primarily concerns organizations with very small operating budgets. I think we might have time for maybe just one more good question. Andy, were there any, I know I don't want to put you on the spot, but were there any that you had held over from what you flagged that you thought I've missed? Anything that seems really exceptional to you? I know that we will definitely make an effort to review any questions we have not had time to answer and update our frequently asked questions on our website to reflect answers to any of them that we think are relevant to the larger group.
I can answer this question, the difference between MTDC and the 10% de minimis. The MTDC, which is the modified total direct cost, it's the equation that you do to get the number that you're going to apply your indirect cost or NICRA or de minimis on. Basically, usually it's total direct budget minus participant cost minus equipment. And then when you get that number, and then you applied your NICRA on that total or the 10% de minimis. So this is an equation and this is a rate. They're different.
Thank you so much, Omar. I think we are going to close out. Know that we have some questions that were not answered, and like Henry mentioned, we will add anything that seems relevant to a broader audience to our frequently asked questions document on our website. That will be updated in about a week. We also added questions that we weren't able to answer from our last webinar onto that document, as well as posted a recording of our last webinar to our YouTube. So there are lots of resources that are available to you. Just to close us out, a final reminder that proposals are due on September 29th, 2022 at 5:00 p.m. US Eastern Time. We will, like Omar mentioned, we're hosting a final webinar in August that you can register for on our website. We're just going to go through a couple of additional considerations before you submit your proposal, and we'll also be answering questions there as well. If you don't want to wait, you can look at our frequently asked questions document. You can shoot us an email at stevensinitiative@aspeninstitute.org, and we will do our best to get you an answer as soon as we can. But thank you so much for all of these good questions and for your time, and please don't hesitate to be in touch if there's anything we can do to help. So thank you all.